And there you have it. As Tony said, it's like the Super Bowl every day.
They do this every day at 4, the closing bell.
They do, up or down. The closing bell at the New York Stock Exchange looks like we're up 408 points. So, that's always good when we talk about it being up. The Dow Jones closed today at the end of the month of January, bouncing back after falling last week. It ended the day up again, more than 405 points there.
Pretty good, I guess.
The NASDAQ
we're gonna find out.
Oh, wow, that's you.
This is on my expertise.
We're still getting used to this.
We're veering into my. The NASDAQ and the S&P 500 both rallied. That's what all the clapping is about before closing up for the day. Sébastien Page is the Chief Investment Officer and Head of Global Multi-Asset Investment at Rowe Price, and he joins us now for more on all of this. So it's a big, complex marketplace, but it's up 1%. Can you explain that, sir?
Well, yeah, it's good to get an up day because it's been a tough month. I think the two main factors that drove markets today were A, buy the dip, and B, rebalancing. There is a lot of cash on the sidelines. In aggregate, in the United States, there's about $1 trillion in excess in checking accounts relative to history. So investors are buying the dip, and this tends to happen towards the end of the month. So we also have a rebalancing. If you notice today, the NASDAQ outperformed the Dow. So month-end, people tend to rebalance.
When you say buy the dip, what you're saying is that people saw it going down. We were in correction territory for a while, and folks who had money in the bank said this is a great time to buy a low because it's going to be going up.
Yeah, and look, stocks are down year to date quite a bit, and it's the end of the month, so people are rebalancing their portfolios. There is cash on the sidelines. So that's what I mean when I say buy the dip. It's not necessarily just buy the dip intraday, but in general, leaning in to weakness. But the interesting part of all this is that today we saw the growth stocks outperform the value stocks. I don't think that's a sustainable trend for the year. That's why I'm arguing today was more of a technical rebalancing effect, if you will.
Interesting.
And you talk about the trend over the year, something that, people who follow the stock market and are looking at investing, they always want to try and figure it out and outsmart those who are on the floor all the time. But what do you see the trend as when you look at 2022?
2022 is going to be a year of normalization. We're going from peak growth, peak inflation, peak stimulus, peak supply bottlenecks into a more normal kind of environment. We're going through a COVID cycle, if you will, as opposed to a normal credit cycle. Our view, and if I could summarize how we're positioned, we're playing defense. We've sold some stocks, not all of them. We're still invested. We're still diversified, but we're playing defense aggressively. We're long cyclicality. We're positioned for the reopening. When you're investing, you always have to think about what will the world look like 12 months from now? And 12 months from now, I think, we will be in less of a COVID on environment and what we call the COVID off environment, more of a back to normal environment. And this is a reopening. So there is pent up demand in the economy. There is pent up supply, pent up housing construction. So the reopening continues. Growth will be lower than last year, but it'll still be high by historical standards. So we're playing a bit of defense. But within stocks, we're actually going long the cyclical reopening trade right now.
I want to go back to this wonderful phrase, buying the dip, and apply it to a specific market situation. That would be the stock of Spotify and their controversy involving Joe Rogan. He is embroiled in a back and forth with some musical legends, Joni Mitchell, Neil Young, over alleged falsehoods. I don't think they're really that alleged. I think they are falsehoods. And he says he's trying to correct the record. There was a dip in the stock, as I understand it, on Friday, but now it's up 12% today. What's going on?
For us as asset allocators, we delegate the stock picking decision. So we don't follow stocks intraday like this. I think generally speaking, you're looking at an important trend here towards digitization and decentralization of the power in the news and media businesses. And that will create some volatility, that will create some tough political discussions and some soul searching. And you're seeing some of that today with these types of stocks. And generally speaking, if you think about the COVID stocks, right, the stocks that have done well during COVID, those are stocks that are well positioned for digitization, for staying at home and consuming goods and media on a digital basis. I think that's kind of going to reverse a little bit this year towards more traditional value stocks.
All right. Well, as long as Taylor Swift doesn't leave Spotify, I think they'll be all right.
You know, buy the dip, it doesn't refer to like guacamole. I think he's talking about buying stocks, right? Yes, okay.
Of course. Peloton, Netflix, those are clearly a safe bet right now. Sébastien Page, thank you so much.
Thank you.